Hey, how you doing? I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage, and welcome back to the channel. Today we're talking about my mortgage process from start to finish, from the very first time I talk to you to the very end when you're a client for life, and we do your mortgage, your follow-on mortgages, and all your kids' mortgages too. So basically, it all starts, first and foremost, with the discovery call. So a lot of times you'll go to my website, you'll be referred to me, and then we'll schedule time to talk. That works for both of us, and we figure out what you want to accomplish. I call that the discovery call. Figure out you want to buy a house, you have a house already, you want to refinance. These are the goals you want to accomplish, because ultimately you want to accomplish the goals that you want. So that's what we want to do for your mortgage. Nobody wakes up and say, I would love to be in hundreds of thousands of dollars of debt. A mortgage is a tool to accomplish the mission of your family, basically to acquire a house for your family to live in, as well as either that or investment. So we schedule the discovery call. We go over all of your details, figure out your qualifications. We do a further loan application, and then we usually send the online loan application. And which is the easiest way, because it authorizes credit pull and have you sign electronically, allows you to upload your documents, and you can do everything on your phone. So it truly is a one-stop shop for your pre-approval. So once we do that, then we schedule a strategy call. So there's discovery and strategy. And most of the time, what I'll do on a strategy based on our discovery call is I will usually do a video. I use a software called Mortgage Coach, Total Cost Analysis. It's a really good program. Helps lay out side by side about all your mortgage options. So there are options. So a lot of clients don't know that. They think, well, I got to put 20% down, or I have to put or you have to get a 30-year fix, or 15 years, or whatever it may be, or so people I talk to say I got to put 20% down, and I show them, well, maybe not, maybe put down 15 or 10, and here's how it looks, and here's the different payments. So at the strategy phase, we look at all the possibilities, and then just kind of give you some clarity. So after that, we get the mortgage pre-approval. Okay, so then you're pre-approved. You have a pre-approval letter for you and your realtor. You're out shopping, and you're fully pre-approved. And they generally will expire every 30 days, and only because your bank statements and your pay stubs and whatnot will get outdated. So we'll definitely need updates to those. So okay, so you're pre-approved. You're out shopping. Usually I follow up with my folks every week, say, hey, how's it going? Do you have any questions? Anything changed? And then eventually, hopefully, maybe in this market, you'll find a house that you guys are you're under contract, okay? And then we move to the next phase, basically contract received, as I call it. So your contract is received. I review the contract. Now, most of the time here in Florida, we use the as-is, or they call it a FAR contract for most resales. It has certain what called boilerplate items about who pays what. I make sure that the initials are all signed and the dates are all signed. Everything's in there that needs to be there. For instance, like a condo needs a condo rider, FHA, or VA needs an FHA, VA addendum. Make sure everything's signed and ready to go. And then we figure out who pays for what. Now, if you're using a builder, a lot of times they have their own proprietary contracts, and they're very voluminous, and you have to dig through as to who pays what. Generally, it's a lot of paperwork to tell you that they don't pay very much at all, unless you use their folks. The builders are a whole other conversation. So basically, we get the contract. We figure out who pays for what. I'll update my pre-approval to make sure nothing's changed based on our initial discovery and strategy call as a previous. And then the next phase is called disclosures. Now, most of the disclosures these days are all electronic. You can e-send them on your phone. It's all very, very easy. Basically, the initial disclosure package includes one of the forms called the loan estimate, and you can check out my loan estimate video here. That's probably the most important piece, because that discloses all of your fees, okay? So, and then there's a lot of other disclosures basically say that I'm not lying on my application. I understand mortgage fraud is investigated by the FBI. All these different federal regulations. And I tell my folks that basically you're saying, yes, I applied for a mortgage. And then after, one of the pieces in there as well, it's called the intent to proceed, and then we can't proceed with the mortgage until you sign that, and you can't order, and we can't charge your appraisal and move on to the next phase. So on purchase and refinance are kind of similar. Usually on a refinance, you agreed to these terms, and then we kind of just move, and it's kind of just race to the finish from here. But in this video, we'll talk more about purchases. Okay, so basically you're under contract. And so the next phase is the inspection period. Now this is basically your period to, depending on the terms of your contract, a certain number of days to investigate the property to make sure that it's well enough to buy. So you would go ahead and do your inspection, and if you don't have a home inspector, I have several that I work with that are awesome, or I can refer you, or your realtor can refer you. So you get the home inspection. Now the home inspection is not required by the lender, but it's 100% recommended. Now there are certain inspections here in Florida that are required for insurance, namely what's called the wind mitigation, depending on how old your house is, and if your house is generally over 30 years old, you'll need what's called a 4-point inspection. Okay, so once you get those inspections, and then at this point, I can help you start shopping insurance. If you have an insurance agent, you can use who you want. It's just another value-added service that I do. I have certain insurance agents that I use. They shop multiple vendors. It's just one less thing to worry about. Okay, so you'll get the inspection. You'll get those insurance inspections, and then basically you reach a point, you say, okay, here's my inspection report, and am I going to move forward? Or is this house a piece of crap, and I'm not going to move forward? So, and then we don't move to the next phase until I get the green light from you and your realtor to say, yeah, we're moving forward, and we're good to go. So the next phase is appraisal and title ordered. Now, the appraisal is the representation of how much the property is worth based on comparable sales. And generally, if you're paying cash, you're not going to need that, obviously. This is a mortgage video. But generally, you get a mortgage, you're going to need an appraisal that determines what the property is worth based on comparable sales. So we order the appraisal. Order title, which is basically making sure that the ownership, dates back to the beginning of time. That's why you have title insurance. I have other videos on my channel that talk about title. Basically, those are the first times that we do order out, and it first work order, and then it's also the first time you spend money, because the appraisal you pay for out of pocket. So I'm not going to charge you that money unless I know for sure that you're going to buy this house. So you order the title and the appraisal. Okay, and those are order outs, and then we'll take all the documentation that you got during the discovery phase and pre-approval and things like that, and then it's called submitted to underwriting. Okay, so so we don't need to wait for the appraisal to come back to submit to underwriting. Depends on turn times, but generally we'll submit your loan to underwriting with the documentation we have, and we'll get the initial underwriting approval, which brings us to the next milestone, basically approve with conditions or loan commitment. There's a provision in your contract. You have to have a loan commitment in certain days. So you have to have an approval with conditions is a loan commitment. And every approval has a condition, no matter how clean you go into it. It's going to have approve with conditions. And it's generally your driver's license, the title, the appraisal. Like I said, we ordered the appraisal, but it hasn't come back yet. That's a condition of the loan. I need the appraisal, obviously known. But getting the initial approval lets us know what items we need to satisfy the loan. So while we're waiting for other things to come back, the title report has to come back, insurance, the appraisal has to come back. So that's what we're waiting on. So you have an approval with conditions. So loan is approved, good to go. Okay, and then either before or after that, you have what's called the appraisal received. Now the appraisals these days are taking a long time because it's a very busy market, and so just wait for the appraisal to come back. Now there's basically one of three ways that can happen. So the appraisal comes back at or above contract price. Yay, awesome. Okay, or the appraisal comes in low. So so basically the appraisal comes in very low, or not very low, basically it's lower than contract price. So you have a choice that you work out with the realtors. Either the seller is going to drop the match, you guys are going to meet in the middle, or you're going to just pay the contract price. And that's what we're seeing more and more of these days. It's all market dependent, because we back and flow to seller's market, buyer's market. And really, that's how your realtor will help you negotiate those depending on your situation. Okay, so that's the next one. Okay, so like I said, we have an approval with conditions. My team will reach out to email you what the conditions are, what things we need from you. Many times it's things we might have already gotten, and we try and anticipate those at the very beginning, all the way back in the strategy and back in a strategy phase, based on your situation. Items that I know I'll need. Like for instance, if you had a short sale 10 years ago, I'm going to need documentation from that, but I'm already going to know to ask for that. Or like if you're a veteran, like I am, so I know I'm going to need a certificate of eligibility, or if you had a charge-off entitlement. So I kind of eliminate a lot of your conditions 90% of them before you even get submitted to underwriting. So that's kind of what we do here. So, and then my processor will submit the documentation based on the checklist. Okay, you send it back to her. Most of the time it's your escrow deposit. Like on a contract, you're going to put down whatever is negotiated on your escrow deposit. I have to verify it leaving your account. Basic little things I have to document. Okay, so once we get all the conditions in, my processor will submit it back to underwriting, and then we'll clear it. And about 90% of the time, we'll get what's called a clear to close, or CTC. Okay, that's the next phase. Okay. So clear to close means that just like you're clear to close. Ideally, you get it before your contract date. And there's a process that happens. Now, also at this time, the next phase, kind of usually before CTC, is called a closing disclosure or early CD process. Now, I did a closing disclosure video here. You can check that out right now. But generally, the closing disclosure has to be signed 3 days before consummation. Okay, so that's what the government calls your closing. So in order to get around that 3-day wait, as soon as we have certain pieces of the information, namely your appraisal and title back, and we're just waiting for turn times to clear your loan, we can send that CD out early. So we don't necessarily have to wait for, like some lenders require a CTC then a CD. My lenders allow us to do a CD first, which saves some time, especially if we're waiting at the end of the month, the turn times get up there, in order to be able to close on time or early. Okay, so you'll get the initial CD signed out electronically again, the same way that you got your LE. So you just and if there's a spouse, even if they're not on the loan, your spouse has to sign it as well. So that date starts your three-day wait. For instance, if you want to close on a Friday, you have to sign by a Tuesday. So it's just 3 days that you have to wait in order to sign that. And also it holds true for refinances as well. Even though on an owner-occupied refinance, you have a 3-day wait, then a signing, then 4 days later is funding. It's like, again, another thing the government doesn't make sense about. Okay, all right, so your CD is out. Okay, so the next step is what's called docs out or balancing. Okay, so you're clear to close, it hasn't. So you have to wire your funds. Okay, how do you know how do you know how much you have to wire? So what happens is the title company and the closing department from the lender do what's called balancing the package. So they figure out what's been paid. Did you pay your insurance up front? Or are you going to pay it at closing? And then they get the final figures to the penny. So, and they know. And usually, I'll advise my clients that you don't have to wait for a final figure. You can always overwire and get the balance. I'll know a general ballpark about what you need to wire. So you don't necessarily need the exact dollar to the penny figure to wire in order to do that. And yes, you do need to wire those funds these days. Cashier's checks are generally no longer accepted for closing. You have to wire those funds. Again, wire instructions, you definitely want to get directly from the title company or for me, not even via email. Usually I'll call them on the phone and tell them over the phone about the wire instructions, because do your research on wire fraud. It's very, very important. Okay. Like I said, next one, okay, closing day. Okay, so closing day, I did another video about what happens on closing day, so you can check that out here. And basically go in and sign a bunch of paperwork, basically along the lines of, yes, this is a mortgage. Yes, I know I need to pay it back. And I own this property now. And then as I go in the video, there's a signing and a funding. So you sign your paperwork, the closer sends it off to the lender to fund, and then you get authorization to funding, and then you get your keys. Yay! Okay, so that is the funding. Okay, usually you go and you cannot get the keys until you get funding. So I've had some fundings, as I explained in the video, that go over the weekend, and you cannot get keys until you fund here in Florida. Okay, all right. So that's the funded stage, and then you'll. After that, you'll get what I call client for life. So you're going to hear from me. You'll be part of our monthly digest called HomeBot. I'll have your monthly digest about what your home is worth. What if your Airbnb'd out a room, what it would be. Just certain things about what your market is, what rates are. And you'll hear from me throughout the process. So I know it's a lot, but those are the general steps. And then you hear some more videos that talk more about the home loan process. Of course, if you're looking to buy, sell, refinance, I'd love for you to give me a call. Thank you so much for watching, and I'll see you guys on the next one.